Hi, everybody. This is Victor from Trend Following Trading for Beginners. And in today's episode, I would like to talk about how to handle trading losses and reset expectation. Coming up next. Hello there. Losses. Today, we really want to talk about losses. One big word. Trading, basically, you do expect losses. But I think majority of people, when they start trading or learning about trading, they're looking for a holy grail. They have the wrong mindset. They think finding the right system, the right indicator, or the right market, I'll always make money and I'll never lose. That is totally wrong. A lot of people, just like myself, when I first started off, we are attracted into trading because of the money, and we don't really want to lose. Losses mean we lose money, and we have a very limited mindset. So we bring in, I don't know, a couple of thousand quid or £500, whatever, and don't want to lose a lot. Or some of us will expect to lose a bit, but our expectation is like, okay, we lose 10% of it, and then that's the maximum. But as you go into trading, you find yourself hypnotized and keep on trading, doing the same stupid mistakes, and keep on losing. And sometimes we fans trade the market and then hoping and against hope to make money, and it's totally wrong way of handling losses. Basically, it's to me over time, it's very much like handling losses. Very much like winemaking. It takes time to mature. It really takes time to understand how to handle losses, understand yourself, and then not to take it personal, because the market in general just numbers. Just at the end of the day, it's just people trading against each other. They didn't come there and come to the market and try to be nasty to you. They didn't come and get you, but your own expectation and the way you view the result sort of think that the market is out there to get you. It's not. And like my previous podcast saying, if you actually have the correct mindset as if running like a business, you do expect certain losses. Let's say you have a piece of joint. Your ingredient, most of it is fresh, and you have to make things very quickly. And because of fresh fruits, meat as well, the prices fluctuates, and depends on the market or depends on the particular week. If people really like to eat pizza, or if there's some big event or something, you might end up not selling as many pizzas as you would like, and you over ordered, and because fresh fruit only can last certain how many days, you have to throw them away. And this is a fact of business. It's just how it is. It's part of business trade, and you have to factor in. Trading, people take it as a hobby. They don't factor in that there's losses, and they don't look in the losses in a cool, calm mind and say, this is how much I'm willing to take, how much losses I'm willing to take, and how much I can cope. And most of what I see people say I'll draw down or lose 20% of my money. In fact, they probably get set very uptight when they lose like 10%. And some are very adventurous people will say 20%, later on it turn out to be 30, 40, 50% because they want to get the money back. Let's say they buy some shares in Microsoft and they lost 20, 30%. And they revenge trade and hoping the next trade Microsoft will give them the money back. Again, that's totally wrong to do things. The market can only give you what it give you. It's a random event. You cannot really force it. But our interpretation of our losses make us do stupid things. Our lizard brain and always try to get money quickly. Try to avoid pain, and don't handle winnings properly, that kind of stuff, and it causes loads of issues. So in general, for me, over time, what I learned is For beginners especially, I would recommend, which I've said in my last episode, go and do some paper trade first. Make sure that you are okay with the type of strategy that you're using, that you're okay with it, and you can actually look at the drawdown, the losses on the paper trade and trading, and then see you're okay with it. Then, when you're happy with it, go live trading, but only risk very small amount. For example, if you are new to trading, just basically instead of buying so many different shares or forex or whatever, just stay with one. Let's say you like to do gold, trade gold, and then the margin calls, whatever, the money that you put up is relatively small, and then you can quite comfortably cope with it. Then just stay with gold. Don't jump around. The first year, the main expectation is not to make money. The first year is actually trading to find out if the strategy that you have been testing on paper is actually working in real life. And I said that in the last episode, there's so many things in real trading that can trick you. I mean, for example, if you've been trading oil over the weekend, just this past weekend, 10 drones, so to speak, were attacked Saudi Arabia oil refineries, and today the oil prices, both Brent crude oil and US crude, went up like 15-20% in a split of a second when the market's open. Now it calms down a bit, but still they're up more than 10%. These are the type of things that you cannot be expected to happen. And then if you're on the wrong side of the trade, let's say you've been shorting it, and suddenly some sudden event happens like that, you messed up. And because of event like this, you have gaps, and the price of the gap through your loss, your stop loss, so to speak, if you have been trading, selling crude oil this last week or so, you have incurred losses. A lot of people make losses. Some people like me, because the trading, the system said go long. It's been go long 3-4 weeks now, and suddenly this happened, and then thank you. For me, basically, it's a gift from God. Suddenly the price gone up. But again, I have no control of it, and all I can control is the amount of losses. So for those people who have lost money today, even if you have your stop loss in there, your stop loss will not have saved you, and you probably have to close your trade today, losing quite a bit of money. But just think of it this way: you're in there for long term. You're not just going to trade for one day or one trade or 1 month. Now, if you give yourself 12 to 18 months, which is normally how long a new trader would take to really, slowly become profitable, learning from their mistakes and stuff, you don't fixate on the losses. It might be a lot. It might hurt you a bit. It might take you a bit of time to recoup those money you lose. But that's just part of trading. Gaps, up and down, in your favor or against you, happens in real life, and it's not like trading on paper. Sometimes you see them as well on paper, but because it's paper trading at a time when you're testing your particular strategy, it's not actual money involved. Your emotion, your brain is not playing up because there's no money on the line. Now, when you start having money on the line, it's a totally kettle of fish. So for first 16 months, do as little as risk as little as you can, and trade according to your system, but only trade maybe, like I say, gold or crude oil or a particular pair, let's say, currency pair, British pounds against the US dollar, British pound against the yen, or yen against US dollar, or whatever you fancy. But just trade with that particular one and nothing else. And trade for a year. Over the year, you'll find out all sorts of patterns, all sorts of things could happen. I just mentioned about gaps. So mentioned next you probably see when there's a market, suddenly events happens, the bid and the ask spread between buying and selling could be quite huge. And also, if you're in an illiquid market, you start with illiquid market, I don't know, orange juice or something even like over-the-counter trade or something, you can see a large fluctuation of the spread, and you lose money that way as well. Now, how you going to handle that? is only when you close your trade and review your trade and look at what can be done better and learn from it. And you have to have a good emotional mindset. Now, how I found to be the best mindset to have when you're trading is, it takes time to learn this, is to be detached from the result. Detached from your actual winning and losses. Because at the end of the day, if you step back and think of it, all these just mathematical games. In trend following, it's just mathematics. It's a systematic way of trading. It's based on maths. It's based on numbers. Just as so happens, this number is based on money. But you don't think of it as money, just think of it as figures, values in the equation. It will help you to ease your mind. And also, the other suggestion is, don't trade money that you cannot lose. Scarce money, that's what they call, the Western world call it. Because I'm from Hong Kong, we have our Eastern way of saying it. We say, money don't come to rush doors, Money comes and goes wherever it likes. But if you really desperate to win, desperate to trade, you will make mistakes. And when you make mistakes, your losses emotional side of handling losses in play games with your head and your personality, you get really upset very easily. So, first year, within the first 12 to 18 months, don't expect to make money. Even if you make money, it'll be very small. But first year basically is learning from your losses, how you learn to handle your losses, learn about yourself, learn about your pain point, learn about how much losses you can handle. Don't even think about making money. The winnings will look after themselves. So long as you follow one of the main rule, which I also said in previous episode, is cut your losses and let your winner run. The first loss is the best loss. So if you say you have 1% loss, okay, and out of your account, say you have a £10,000 account and 1% is £100 and you lose £100 in whatever trade you're doing, you get out. That's your uncle point, that's your pain point, and that saves you sanity. Now, most people say 1% is so small, I want 10% of 20% or whatever, but people always just think about how much money they can make. They forgot how much money they can lose. And if they lose, let's say 10%, 10 consecutive losses can wipe out your account. It happens, and happens very often, more often than you think. If you have 1%, 10 consecutive losses, only you lose overall 10%, not 100% if you do a 10% trade. So those are the type of things that you need to watch out. And also, people always talk about just money losses. They don't never really talk about much about emotional, issues when you lose a lot of money that you kind of lose. Scarce money, you lose them. Your children's pension, your children's school fees, or your pension funds, and you get really panicky about it. And that mental fall, when you lose money, it's quite painful and it's quite difficult to handle. And so to save yourself from emotional pain, so to speak, trade small. Now, over time, when you grow, let's say a £10,000 account, whatever, grow over to 20 or 30,000 pounds, your 1% become £200, £300, £400, £1,000 over time. So you will make money over time. So long as you watch out your losses, your winners will look after themselves. And I think another thing that's it happens to me, I think it happened to a lot of people as well, is that if you in school, you have achieved high grade, a good degree, a PhD, a master, a first class, whatever, comes from your Ivy League university, Cambridge, Oxford, whatever in UK, those are top 5 university or Imperial. It messes up your mind because you think getting excellence in education arena, in school, in university, or even in business, you think you make a good businessman and make quite a bit of money. You bring all that thinking and ego into trading. Now, trading is trading a random event, trading people's emotion. And when you hit losses, you think your success can be port it over, transfer over very easily in trading, which is totally wrong way of thinking. And school especially, it teaches us not to fail. And when we fail, it's our own fault. We need to remember equations, remember answers, and then regurgitate the answers. And sometimes you do it on your own. Going in trading, you basically, you're against the rest of the market. You're against everybody. But you have to be humble when you go in the market. You don't just think, because I got an A or first class or a PhD, I'm very successful in business, then I can make a killing in trading. It is a totally different game. And this preset, pre-condition of your brain, and you bring that expectation into trading, it causes all sorts of issues, and cause you to handle losses in the incorrect way, not detachment. You bring in your ego, and you think, I make money, or I make a very good, students, or I make businessmen, and I make loads of money in the market. I can just come in the trading, share market, or forex market, or gold, or silver, or crude oil, and I can still make a killing. The market just going to chew you out and spit you out, and you go lose a lot of money, and you say, what the hell's going on? And you try to go buy in again with another account, and you keep on blowing up because you do the wrong thing. Not just not foreign system, whatever. You just a wrong mindset of how to handle losses. Take this from me. I think a lot of people talk about this as well. It's that losing is part of winning. To me, I put it more bluntly. Losing and winning are twin brothers. They are sisters. You cannot have one without the other. You cannot have light without darkness. You cannot breathe in without breathing out. So you cannot have winning without losses. It's part of the deal. So learn to handle it. So keep your losses small. That's why I suggest 1% of your overall trading account per trade, and don't lose your shirt. And inevitably, Flipcoin exercise, as you guys did before, you listen to some of the previous episode, how to handle probability and stuff, you will notice that you have sequence of wins and sequence of losses. And that sequence of losses varies over time. The most I read about from some books and other people is 14 or 15 times losses in the same for a particular trade, for a particular market. And this trader have lost 14 times before the actual winning trade happens, and it was a big win for them. It's an actual trend established because the market go up and down, and it's going sideways, trade up and down, trying to find its way, so to speak. And this trade does lost 14 times until the market say, I decide what to do is going up, and then because it keep on following system signal, he lash out and win lots of money afterwards. But only because he didn't give up, even after 14 consecutive losses. Now, can you ask yourself, can you handle this? And if you risk 10%, even 5%, 14 times, 20-30% of your account gone. Can you handle that? But if you risk 1%, 14, 15 times consecutive losses, you still lost 15%. It's painful, but not as painful as 25, 30, or 50%. And you keep your sanity, keep on taking the next trade, providing your system is have a positive edge and give you a trading signal, just taking it, and you become better. And another way to think about it is just about the piece of apple or selling apples, selling fruits. You buy a basket of apple from wholesale and sell it in the fruit shop. Some of the apples will be bad. It's inevitable. If you're lucky, most of it not bad at all, but some will be smaller in size than the other one, and so forth. And then when you try to sell the apple, it depends on your customer's mood for that particular week, that couple of weeks. You might be able to sell all the apples, you might have some leftovers. And any fresh fruit, like a piece of joint, a lot of fruits have, most of all of it, have a sell-by date, so to speak. And if you don't sell them all within a short period of time, you incur losses. Because Let's say you got 100 apples, you only sold 50. 50 of them are to either eat it or you throw it away. That's just life. And you have to take into account when you're running a food salad business. So same thing. When you're running a pizza joint, you take into account of the losses of the fruits and materials, and dough and meat and stuff. Same thing for trading. There will be losses, and you take that into account. Don't just fixate about the money. I mean, it's an industry-wide problem to me anyway, that a lot of people out there advertise to say, yeah, buy this system in no time, you'll be able to make money. Look at how much it is. I mean, constantly I got bombarded by emails saying, oh, why don't you come to this webinar? And I'll show you exactly what I have done in my system. And if you trade at spread betting or £10 per pound, you look at us. We make 500 pounds this month using this particular system, this particular signal. And you put £10 on it, you know, £5,000, £4,000 easily this month. You can supplement your income. And there's a lot of people out there actually selling things like that. You know, few and far between course sellers out there actually tell you, look, these things takes time to learn. It's just like any skills. It takes time to mature, learning your skill, your craft, and while you're learning it, don't expect to make money. But these people are not going to tell you the truth on that. They just tell you how to come over and train with us, and don't tell you the truth. And basically after training a couple of weeks or a couple of months, and you're on your own, adios. They may give you email support, but win or lose, it's not their money. They already got your money when you are trading. When you're learning about how to trade, you give them the money for the course, and it's totally different from what I would like to have. When I was starting, I really would like not just a mentor, but somebody there that I can fall back onto and talk about things. That's why my dream is, if you look at my website, I have a dream of creating a school, a trading school, that not just show you how to trade, but actually provide a support group, a team of people who you can trust and work together with you and not let you out on your own, and actually help you to be accountable, push you to be better, and have a support group to help you. So, and also the learning part of how to handle losses is part of that. How much I wish that happened, but out there people are not like that. They are selling your course, and after finish the course, they don't even contact you, and take 24 or 48 hours to get back to your email. You're lucky, and then your trade, you day trade. You talk about hours, minutes, seconds, and you don't get the answer you want. And this is just how it is. So for learning how to trade, this is from the bottom of my heart. Please take account of your losses and ask yourself how much you can lose, and then trade accordingly. Don't bring your ego into trading, and reset the expectation. Really is. You do not expect to make money in your first year. If you're really serious about trading, you can random trade, even make some money, but over a long term, it's just like any skill. It takes time. You really want to become a trader, a profitable trader, that is, not just make some money this trade and then lose 10 trade and so forth, and lose your shirt at the end of a year or something, or within 6 months. That's not the way to do things, and you need to reset expectation and be respect losses. Losses do happen just like winnings, and you don't have your mind screwed on the right way to set the right expectation. You'll find very frustrated. Emotionally, you feel very frustrated, and then you do a lot of defense trade, not reviewing your close trade and learn from your mistakes, and keep on banging your head again the same old wall and having a bloody head, and you won't know why you lose. You keep on losing and burning up your money, and losing lots of money, and also your sanity. So I hope this podcast has been useful, and if you find my podcast, this one particularly useful, please subscribe to my podcast and check out my website and so forth. And I'm on Twitter and also on Instagram sometime. Just check it out, and if you want to have a chit chat with me about losses, how to handle your losses mentally and so forth, just sign up for the Zoom call, and I'm here to help you. There's no house sell. Basically, I'm just here to help you and just give you what I've got, what I've learned, and then see what I can do to help you. Okay. So hope you have a good day, and I will speak to you soon. Bye bye.